Good morning. I'm Seth Berenzweig, and we're coming to you here from our broadcast studio here in McLean, Virginia, to talk about the historic next round of legislation that's just recently been triggered into effect by Congress, known as the CARES Act. When we were here last week, we talked about the prior wave of legislation that dealt with some really crucial new rules as it relates to dealing with your employees and key aspects of business management. And this morning, we're going to be talking about the current wave of legislation. Today is a historic day because the new act literally comes into effect right now as we speak this morning, enacted by Congress. And there are a lot of moving parts related to paycheck protection. And we're going to be here to break it down for you because, as we'll talk about, the benefits are very significant. And I think that people will be surprised to learn how broad the application is. So just jumping right into the deep end of the pool, let me just bring in my law partner, Declan Leonard. Declan, good morning.
Good morning, Seth. It's hard to believe frankly, it's hard to believe it's only been a week since we sat down together last Friday and talked about the new leave laws. So much has happened, so much unfortunate destruction from a health standpoint, from an economic standpoint. But there has been some developments, major developments with regard to what Congress, what the federal government is doing to help businesses. And today, much like we talked about last week with the leave laws helping employees, today we're going to talk about what's being done to help companies stay afloat. And ultimately, that also helps employees, too, because it is to run payroll and protect payroll that what we're going to be talking about today is going to focus mostly on.
Now, just setting the table on this a bit before we jump right into it, I was on a phone call last night with about 40 CEOs. The call went till about 8 p.m. All of those CEOs were understandably and quite reasonably indicating a lack of clarity with respect to what exactly were the rules going to be, who is it going to be applied to, and what would be included in the calculations for the loans. And it was ironically not until later that evening that I saw an email from you. You must have been having a slow night last night.
Once again, another exciting night in the another exciting Thursday night at the Leonard household. We finished Tiger King, so there's really nothing to do. So I read the interim rules under the SBA. That's how I spend my time.
I guess that's where we are right now. And now we have some clarity, and it's interesting to note, as we'll jump into today, that there was such a lack of clarity going into late last night that we still see this morning major financial institutions not even understanding whether or not independent contractors should be included in calculations to be able to bottom line the amount of the loan that Congress intended for small business owners to get. So why don't you set the table for us and just help us understand what is this and how does it work?
Yeah, so let's talk about it. So last week we talked about the leave laws, we talked about unemployment, we talked about things that employees could do if they find themselves either needing to care for a child, they themselves are sick or caring for somebody that's sick, or the company's out of work, the employee can go to unemployment. Today we're going to be talking about what's called the it's the Paycheck Protection Program, and it's under the new CARES legislation that just came out. The CARES Act has a couple of different moving parts. There are some tax credits. There are some things that come into play. But honestly, all of that is really just pales in comparison to what we're going to be talking about, what I would say pretty much the main focus today, which is the Paycheck Protection Program. And the goal of the Paycheck Protection Program is to put money very quickly in the hands of small business, 500 employees or less, to put money in their hands so that they can keep people employed. So just to be very clear, what we're talking about here today is we're talking about companies that are staying in business or keeping employees on their rosters as opposed to laying them off on a temporary basis.
Now, let's define the parameters as we jump right in here. It's up to 500 employees, and therefore, hence, that's really essentially the framework and the definition of small business. What if you are, for lack of a better phrase, a very small business, just say 1 to 5 people, or if you're a principal with just a handful of 1099s? Does this cover you? Is this important historic legislation something that's relevant to you as well?
It is relevant to all of the above that you just mentioned.
Okay.
Independent contractors, sole proprietorships, and businesses all have the ability to apply under this particular program. I don't even want to call it a loan program because, as we'll talk throughout this hour, the mechanism that's been set up by the federal government is, if done right by businesses and if they do what's intended with these funds, it essentially converts over to a grant and a forgivable loan such that it doesn't need to be paid back.
So in other words, what we'll be talking about today is not only how to be able to get the money, but how to be able to apply the rules to unlock the benefits to get the money treated so that it is basically not even a loan. It's going to convert into a grant by the government, and then it won't even need to be paid back to the federal government down the road.
That's right. And one caveat, and you hit this, Seth, at the beginning, is it's evolving very quickly. The details are evolving. We're seeing some banks putting out stuff that we look at it and say that sort of doesn't comport with the interim rules. But knowledge is key here. Keep talking, keep talking. I've been talking to clients since I got into the car to drive here to the podcast studio. They have questions, they have nuances. Knowledge is key. In this, you should be talking to other business owners to see what they're doing, but you should also be talking, frankly, to your banker. I've already been on the phone with as you know, our good friend, our banker extraordinaire, Tim Funkhauser, over at what we call BB&T. I guess it's now Truist. But Tim is, let's face it, he's one of our business partners,
Right.
much like some other vendors that we use that are our business partners. And so Tim and I have been going back and forth, and there's confusion all around.
Right.
And the reason why the banking relationship is so important is you can't go straight to the Small Business Administration
Right.
and apply for this. You have to go to a certified lender. You have to go and frankly,
Approved by the SBA loan program through
Yeah.
which the SBA floats their loans out to small business.
that's right. And most banks see the tidal wave that's coming here from small businesses applying, that they're basically saying, hey, if you didn't have a pre-existing relationship with us, you're probably going to be out of luck. You're probably going to go to the end of the line here. Businesses have until the end of June to apply for this, but it's a first come, first serve. And while $349 billion that's been earmarked for these small business loans sounds like a lot of money, you're talking about the entire United States. Things are probably going to go, I hate to say it, but rather quickly.
Yeah, I think that you were talking about some of the crucial yard marks in terms of how to be able to take a look at this and keep it in perspective. I think one of the keys is also speed, because if you don't get in soon, there's just a defined pot of money in the end zone, and everybody's throwing for the touchdown. So you've got to get in there, and you've got to score it as quickly as you can. So time is of the essence on this. So walk us through what we do. Let's say that now we understand, okay, I qualify. I'm in distress, but I'm a small business. I have between 1 and 500 employees. If I can get this loan relief and I can apply for it, this is going to give me a lifeline for at least the next couple of months. What do I do next?
So mechanically, what you do is, I said it before, you contact whoever you have your relationship with your business bank. And the reason why I say that is because that's the only way you can apply. The banks right now, and I'm going to preach to everybody out there, business owners, be patient with your banks. Think about what's happened. They passed this legislation, the largest legislation ever, really, that's getting money into the hands of businesses.
The biggest grant in the history of the Republic,
Yeah.
and the regs telling the banks how to do this literally came out not much before midnight last night.
No, that's exactly right. And what they're saying to banks is, and banks, listen, we know banks have to follow protocols. They can't just throw money out the door and then say, well, there's a government program, so we're fine. So they have to, they have their own internal policies. They have external regulations that they have to comply with. And yet what they're being told by the federal government, and I applaud the federal government for being so aggressive on this, because, the Small Business Administration, is known for, I hate to say it, but a lot of red tape.
Right. Now, let me just say before we continue the conversation that we're going to be taking live questions from anyone in the audience. So if
Yes.
anybody wants to cue in a question during our program today, we're going to be happy to answer those for anything that anybody asks. And our trusted colleague, Todd Castleberry, is at the board and at the mic, who's going to be helping us as we go through this broadcast. So,
And he's also, by the way, Todd's also taping this. We'll have this up on the Berenzweig Leonard LLP YouTube channel, and we'll be probably blasting it out also. So we are taping this. There's a lot of information that goes on.
That's right.
There's a lot of information that we're exchanging back and forth. Not to mention, there's so many nuances. Some of the discussions I had before I got on here today, we're not going to probably get into today because they're
Sure.
so fact specific, but they're also so important for people to be able to qualify for these loans.
Exactly. Okay, so I'm a business owner / CEO. I qualify. I need it. I'm interested.
Yeah.
I have a banking relationship. What information do I need to gather in order to be able to get this teed up?
Yes, and it's actually a fairly I hesitate to use this word easy. It's actually fairly easy. Maybe it's a truncated process, okay? Because normally when you're applying through the SBA for disaster relief, you're looking at 30-page applications with personal guarantees, collateral. They've done away with all that. There's actually just basically a 2-page application. You should be able to find it on the SBA's website, but there's basically a 2-page application, and it really asks very few things. It's all a self-certify. It's certify that you're being impacted by the ongoing coronavirus pandemic, and that your operations need this money to help keep payroll afloat and keep people on board. And so what you're really looking at is you're looking at what are my payroll costs, and what the mechanics of it are this. You first figure out what my payroll costs are, and it's basically an average of, I hesitate to say the last 12 months because
they just changed it.
They may have changed. They may or may not have changed it.
Right.
You may either do it for the last 12 months or you do it for 2019, which is also a 12-month period. Let's not get too deep in the weeds on this one.
For now, it looks like it's the prior 12 months.
Pull your payroll records.
Right.
Find out what your average payroll is. Okay, that's one number. Add to that what you're paying for your employees on behalf of retirement, 401ks, things of that nature. Add to that what you're paying for health insurance for your employees, and you come up with a number, and you divide it, come up with a yearly number or whatever, divide it by 12 so that you get a monthly number.
That's your average monthly payroll cost.
Yes, that's exactly right. And then you multiply it by 2.5, 2.5 times, and that becomes the eligible loan amount that you're entitled to. And the application literally is, what's your payroll cost? It's just one number, times 2.5 equals loan amount. I mean, that's really all it asks. Then it asks a bunch of questions of whether or not you're a convicted felon, all those other, tough questions to answer. And
you had to hide your shady past, obviously.
Yes. Right. I changed my middle name and everything. But so it's a really easy thing. The confusion I think right now for the banks is, okay, what kind of supporting documentation do we have to provide? And payroll records. You always have tax reporting with respect to your employees, things of that nature.
Okay.
And so those are really the things. So you should be working closely with your bookkeeper or your accountant. Whoever does your books, your payroll services company would be another one. So you should be in touch with all of those vendors today.
So it's really a 2-step concurrent process. Step 1, get to the form. And when you go into the SBA website, there were a lot of people I know, and we realized this yesterday, were going into the website and they were going into the disaster loan relief program. Not correct.
Yep.
That's a dozens pages long application. You can do it, but it's not the quickie process. Now what's happening is that you have this new quick 2-page form process. You have to get the form together, you get your background, source documents together, you feed that to your bank. They are going to have some kind of a portal or intake process, and then they're supposed to get this thing done theoretically hopefully within the next week or so. Now, of course, we don't know. We'll see what next week holds. So do I include or do I not include 1099 independent contractors in that calculation?
So the interim rule that came out last night says that you do not include that. So a company is only supposed to be compiling their payroll costs, not money that they're spending on 1099s, independent contractors, only W-2 and traditional employees. And I'm going to say one more thing that I think is really critical, and then I think Todd says we've got some questions coming up.
Great.
But when it comes to compensation, when you are computing your payroll, you have to stop at 100,000. So if you are paying somebody 125,000 as you're looking back on your payroll, or 220, whatever it is, you have to back out any amounts over 100,000 when you're coming up with what are my payroll costs that I'm multiplying by 2.5. So don't just look at your payroll to the extent that you've got 6-figure income employees. And listen, in the D.C. area, that's pretty much the norm. You got to make sure that you back that out and do that calculation and that deduction, or else your application is going to get kicked.
But you eliminate that person's pay over 100K. You don't eliminate the person.
Correct. That's been some other confusion, but I think pretty much there's unanimity right now that you do include an employee that, let's say, makes 125,000. You just don't include that extra 25,000, as opposed to just pushing that employee out of the equation altogether. That. Everyone that I'm talking to within the last 24 hours have said that's the case.
So then, therefore, to some degree, everybody should be covered. And the last thing I'll say before we kick it over to Todd for live questions is that the purpose of the Act is to also help scoop up people who you have recently temporarily furloughed and bring them back on that covered payroll, because one of the purposes of the act is to keep your business intact. So if you had to furlough people and they're part of your regular average monthly payroll, one of the benefits of this is to also take care of your employees, which is a critical fact.
Correct. The government wants, when this is over, or when at least there's a bit of an all clear, such that companies can get back to some modicum of, regular operations, they want companies to be together. They don't want
Right.
companies to be finding the employees that they laid off that are now on unemployment, who may have a change in circumstances, may not be able to come in. There's very much a vested interest with our whole economy to make sure that companies stay together. So even if you don't have majorly active operations, candidly, I'm not seeing anywhere in any of these where you actually have to have ongoing operations.
Right.
You just have to spend this government money on your payroll. And with that, Todd, let's jump into some of these questions.
Okay, gentlemen, this question is from Diane, and, quote, one of the questions to answer is the applicant an owner of any other business? I am the sole owner of a sole proprietorship. No income, no expenses. Do I need to disclose this on attachment A?
Yeah, I mean, so what they're talking about is what they're trying to get at there is what's called affiliation issues. And the short answer, this was Diane?
Yes.
Okay, the short answer, Diane, is I believe you should out of an abundance of caution. On the addendum A, you can simply say, I am also the owner of X company. And I would editorialize and say there are no employees associated with it. There are no ongoing operations. What they're trying to figure out is this. If you have a bunch of different entities and altogether these related or affiliated entities in the aggregate have over 500 employees, then you're not going to qualify for these loans. And so better safe than sorry that you're accurate in terms of it. It should not in any way, Diane, impact, it sounds like, your application.
And in the converse, what that also means is that if you're an entrepreneur and in addition to running a business, you have one or two other small businesses, but they're somewhat either underemployed or moderately defunct right now, if you disclose it and your employee count still stays well under 500, you will not be punished. You will still be able to qualify for the benefits.
Yes.
Okay, great.
Okay, next up we have a question from Sherry. Can you use this loan for operational expenses other than payroll?
So let me tee that up a little bit. So let's say that you have, and I'm just going to use a round number, $100,000.
Yep.
And then you calculate that and you bring $100,000 in. Okay, great. So you're halfway there. Now, how do you treat that money, and how must you treat that money in a way to have it be converted from a loan to a grant?
Yes.
And then the answer is that there's what I would call the 75-25 rule, which states that 25% can be used for non-payroll related expenses, such as utilities and your lease, which for many of
Rent,
us
yeah.
is not insignificant, your rent. And then 75% will be for payroll related expenses. Is that right?
That's correct. Yeah. So even to take a step back further, you can use the money for operational costs however you choose to do so, but you will have to repay it back unless you follow what, Seth, you just accurately described as the 75-25 split.
Right.
75% to be paid for payroll, 25% for some of these other incidentals, mortgage interest if you own your building, rent, utilities, and interest on business loans that you've taken out before February 15th.
Right. So you get the amount. You have a 75-25 split on how you use it. If you want to have the money treated as a grant, otherwise
Yep.
you can use it however you want, and then you pay it back with a minimum of 6-month deferral until the payment goes back. And how many weeks do you have for the application of how you use the money? How long is the time frame?
Yes, you have 8 weeks. I mean, the way the program's set up, when you get that loan, you have 8 weeks to spend it. They do not want people hoarding cash right now. They want the money to get to employees
Immediately.
through payroll. I
Right.
mean, that's the whole thing. So while you can, I mean, you think about it, the reason why they're putting the 75-25 split is, sure, people would love to get this money in. It would be a cushion in terms of capital for a business.
And you just go to the liquor
We
store,
run a
you buy a
business.
single malt, and then you're good to go.
Again, you're talking malt, I'm talking gin, but there's some continuity from last Friday.
You'll learn later, but that's fine.
I'm still working my way up.
We'll get you there.
Gin is the gateway.
Okay.
But no, that's exactly right. I mean,
Right.
they don't want you to just put this money away or take out or start investing in capital expenditures, building a podcast studio. They want you to put the money in the hands of
Your employees.
Of the employees. It's
Absolutely.
the Paycheck Protection Program.
That's
I mean,
exactly
that's why why they're calling it that. They've allowed a little bit of other incidentals, but it's really supposed to be just think paycheck.
Great for the company, great for the employees.
Yeah.
Todd, next question.
Okay, this from Craig. Craig's question is, we are a nonprofit school. The majority of our employees will only work full-time through the beginning of June. Can we account or adjust for this?
Great question. So I'll take the first piece of it by saying that the small business program, I believe, also applies to small nonprofits.
Yes.
Is that right?
It does, yes.
Yeah.
And I, since the majority of our client base is commercial, government contractors, things of that nature, and because, again, we're drinking from the fire hydrant, I have not studied as much the nonprofit. As I understand,
It still
nonprofit
applies within 500 employees.
That's right. And as I understand, sometimes the way payroll is done for nonprofits, and I apologize if that's not the case in this particular instance for this questioner, a lot of times even though they only work for certain parts of the year, related to schools, they sometimes amortize their paychecks over a 12-month period. And so as long as they still have paychecks going throughout summer, then I think they can. If paychecks stop in June and they can't spend this money on paychecks, I think the goal of it is the Paycheck Protection Act. I don't think they're going to be able to use that money for it.
So they could take the money, but then they would have to pay it back, subject to the small business interest loan rate that would be applied.
Yeah, because presumably they're not going to have these expenses again until September. School starts back up again, and that's past the 8-week period.
So that way you could have preservation of capital, keep it in your operating account, keep people on your payroll,
Yes.
and then later you can use it to further bridge additional payroll, and then you would be paying it back after a deferral of initially 6 and perhaps as much as 12 months, and then you'd be paying it back at a very reasonable interest rate.
Yeah, the interest rate's 1%.
Right, and it's going to be over a 2-year period.
Over a 2-year period.
So
it is. Yeah,
it's a win-win.
It's not free money, but it certainly
Almost
is close
free.
enough there. And if you wanted to follow up with us on that particular question because it has some nuances, just email us. Happy to do so.
Exactly, and I believe our email addresses are on the Facebook screen.
Yeah.
So happy to help. All right, Todd, next question.
Okay, next question comes from Chris. If you apply for the $10,000 grant through the EIDL, will that affect the forgiveness amount given through the PPP?
So any other SBA loan that is extended through any other SBA program, so for example, things like the disaster relief and any other applicable SBA program, is going to potentially impact your ability to be able to get relief under the PPP. One of the certifications on the quickie form is that you are not recovering funds, not recovering grants from other SBA-related loan programs. So if you have that in the pipe and you haven't gotten it yet, you may want to consider whether you want to withdraw the first application and then put in the second application, because one of the certifications on the form is a disclosure to SBA about whether or not you're double dipping. And I don't say that in a bad way. I mean, they want to understand what the status of your loans are.
Yeah, and I think that this specific issue is addressed. And again, it's one of these things where we're trying to figure out the application process since everything's going live today, and this goes into the equation. I would strongly refer the questioner to the interim rules that came out last night at the Small Business Administration. You can just Google it or go to their website or whatever. And they actually do talk about this issue and how it impacts the amount of loan and the forgiveness aspect of that. So again, another very specific question, a great question, but another very specific question that's covered within the interim regulations that were promulgated last night. And if you want us to follow up, feel free to do so. Just email us.
Before we go to the next question, I just want to interject one thing for federal government contractors, which is a big deal in our D.C. metropolitan area. There's an additional provision in the new CARES Act which gives an additional layer of relief to government contractors. If you're a federal government contractor and you're providing important relief, if you're applying and providing support at a federal facility, which due to no fault of your own is temporarily closed, and you perform the kind of work that cannot be done at home. So say, for example, satellite infrastructure support. You, as a CEO or as a principal of the business, have a new authorization through the Act to go to the contracting officer and ask for temporary payments to keep your staff at ready status to be able to be on standby to go back, because the Act says that there's an additional pipeline of cash to contracting officers for government contractors where you can get paid and your employees can get paid even though they're at home right now, to remain in a state of readiness to go back, because it's not their fault that the federal facility closed, nor is it their fault that they're not going to be able to perform that kind of work in their house.
I mean, that's critical, especially in
Yeah.
the Northern Virginia region where there's so many contractors, so many of our clients employ contractors, and you
Yep.
know they largely help to keep the government running, as well as our federal workforce, which you know, and
Go
what's
to your
inter-
contracting officer.
What's
Exactly.
interesting, and what is again, this is a little bit of an anecdote, but it's inspiring. Easy for me to say, inspiring to get on the phone, talk to the clients, talk to the government contractors, and to see how hard they're working and how much they are keeping things going, as well as the federal workforce. I'll put in a plug for my wife, who's just been
Absolutely.
working so much harder. She's at
Right.
home working because everybody's remote, but working so hard. The business of government is still going on strong, and they are,
Yeah.
as I said last week, they're really becoming a great partner of private sector business.
I think America's view towards the federal employee workforce is going to be a game changer as a result of this national emergency.
Absolutely, yeah.
Yeah. All right, Todd, next question.
All right, Declan, smart man, working in the wife high five there. Very nice. This next question comes from Jeff. Is it your read that if we let an employee go during this time in order to qualify for the loan forgiveness, we have to hire back the same employee versus a net new employee?
What a great question.
Yeah, that is good. See, these are all the nuances, and I will say the same caveat that, look, these regulations, because that has to do with the back end. Are you going to get forgiven after the 8 weeks? And so that has to do on the back end. Those regulations have not come out yet. My take on it is they really want to see. I don't think they're as interested in Joe was fired, is Joe back on the job type situation. I think they want to see a consistent employee count such that, because again, I mean, you know, people are losing jobs left and right. They want the numbers to somehow stabilize. So
Yeah, I
my
agree.
take on it, what do you think?
I agree. I think that the government's intention and the Congress's intention is to provide the quickest amount of relief possible to small businesses while still having as many people back on the payroll as possible.
Yes.
The worst thing that can happen for this question is that ultimately later it's determined that you needed to rehire back the other person, which I will be surprised if that's the case.
Yeah.
And then that money that would be allocated for that issue gets paid back at a 1% interest rate. So I would say that if it's your company, you know, bring back who you want to bring back, but you do need to be able to get a re-enrollment process back so that people are back on the payroll.
Yeah, and it's a good point. I want to make sure that this comes through. I think, Seth, you hit on it earlier. Some companies may be sitting here listening to this or looking at the Paycheck Protection Program and say, I already let a lot of my employees or most of my workforce go. I must be out of luck. I must not be able to apply for
Or
it.
what if I can't get all those exact people back tomorrow?
Yeah, I mean, but what the law envisions is you can bring people who you previously laid off, because remember, this is only going to affect today. We've been dealing with this crisis and the economic reverberations from this crisis for a couple of weeks. You, under this law, can bring those people back into the fold, put them back on your payroll, and that will help you to qualify for this. So it's basically at the time that you take a loan, you know, what's your employee count, and then let's compare it to what your employee count is at the end of that 8-week period.
Yeah, I agree. Todd, next question.
Okay, this comes from Saber, and his question is, what if, as an owner in an S corporation, I pay myself through draw and 1099?
As an owner. So I think draws, as I understand it, in talking with tax professionals, I think draws are not being included, but I think that 1099 income is being included. In other words, if he's applying as his own 1099, I think it would be included in it. But we're not talking about 1099 payments to third-party vendors, because I think, as we talked about, there was some confusion whether or not you included that in your payroll costs. I think they've cleared that up in the interim rules that you no longer do so. But so that is a good question. At first blush, I would say you count your 1099 independent contractor pay. I don't think draws, which are typically going to be in the profit form,
Right.
are included here, because again, we're looking at compensation. We're not looking at, you know, trying to
Profit
make sure that
distributions.
profit distributions are stabilized.
And the only thing that I would add to that is that if you are a 1099, I think that you're going to have some flexibility here to be able to weigh your options, because on the one hand, if you're running your own small business, then you can apply under the PPP. However, you also have the new emergency broadening of what is an employee for employee benefits under the state-based workers' compensation.
Good point.
So that's something that you're going to want to balance, because if you look at those numbers, Congress a week beforehand expanded that relief to be able to have an additional backstop of an additional $600 per day for more money more quickly and for a longer period of time. So I think that that would be a great candidate for a follow-up in terms of getting more information.
Yes.
But the short, quick answer is that I think that there are a number of options there that can put some money on the table very quickly.
Yeah, and one variation of that maybe we want to hit is, there are a lot of companies out there that have both employees and independent contractors working side by side.
Sure.
We're not here to opine about whether or not that's valid or whether or not that's a risk for DOL enforcement.
Whether they're
things of that
properly
nature.
categorized, yeah.
But a lot of them are doing the exact same stuff side by side, and for whatever reason, maybe it's a preference on the part of the particular worker that they want to be categorized as 1099. Of course, we're not endorsing that because we know how the DOL looks at that and frowns upon
Right.
that. You have a tough decision to make of whether or not, because those are really, at the end of the day, labor costs.
Yes.
We're not talking about whether or not you hire a third-party vendor, and that's a 1099. We're talking about people who very much make revenue for you but are still treated as a 1099. That's a tough call.
Yeah.
It's a risk. It's a risk call of whether or not you want to include those in your payroll costs.
All right, Todd, next question.
Okay, this comes from Susan, and she says her company is fine now. However, if an employee tests positive for coronavirus, then they would have to shut down because they are a service business with 20 techs going out each day. Her question is, do they have to continue to pay these 20 hourly employees even though there is no work for them under this grant? In other words, they would get to stay home and get paid leave at their hourly rate?
So this is really kind of a hybrid. First of all, it's a great question. Secondly, it's a little bit of a hybrid because it goes into the prior wave of legislation from Congress as it relates to sick leave. So
And
that's
unemployment.
and unemployment. So do you want to take a swing at that one?
Yeah, I think they have a choice. I think it was Susan, right?
Yes.
I think if Susan wanted, if business operations have shut down, really businesses have a choice right now. They can either temporarily let their workforce go. Again, we talked last week about whether you call it a furlough or a temporary stoppage or temporary
It's considered
layoff.
technically a furlough at the moment.
Kind of the same thing,
Right.
exactly.
It's
same
just a
thing.
label.
Then that's enough to trigger these employees to go get unemployment. But if Susan wanted to also apply for the loan, she would have to rehire. She would have to bring those up. She can't just keep that money for a rainy day type fund.
Unless you wanted to pay it back as a short term, or as you wanted to pay it back as a low interest loan.
Well, that's true, except for when she's filling out the form, she doesn't have payroll costs. Well, I guess she has historical payroll costs. That would be a tough one because the form says three things. What is your payroll cost for the last 12 months or 2019, however you look at it?
Are you an operating?
Are you an operating business? Times 2.5, and you also have to say on the right-hand side, what is your total number of workers? And
Right.
for Susan, she's going to have to, I think, say, if she did lay everyone off, 0, I think that would probably doom her application. So she'd have to make a decision whether she wants her people to stay on unemployment, which, by the way, is a very robust, we call it the supercharged, federal unemployment.
Temporary furlough.
Yeah, temporary furlough versus going for the funds and then risking, does this end up being something that she ends up having to pay back?
Yeah, and that sounds like another candidate for maybe an interesting follow-up, and you'll see our email addresses on the Facebook slide. But at the end of the day, I think that there are a number of options, and there are some strategic considerations that need to be brought into play. But what Congress is doing is that, at a minimum, you have a capital preservation opportunity, because if you can do a short-term furlough based upon health-related reasons, then you're able to at least preserve that capital and then wait out the storm.
That's correct, yep.
All right, Todd, next question.
Okay, one more question from Jeff, and he wants to know if we've heard anything from folks in the industry how government procurement executives and/or contracting officers are interpreting the language in the CARES Act provision 3610 minimum applicable
you're talking about, yeah.
contract billing rates.
That was from Jeff? Yes. Thank you, Jeff. That's a great question. Section 3610, which is a really critical provision, is what we talked about briefly in passing a few minutes ago. That's the provision that is now telling contracting officers that they have dramatically and immediately expanded modification authority, or what we say in the federal space as mod authority, to and you have to 9 times out of 10 you have to call your contracting officer. Don't assume that she's going to reach out to you, although she may. To be able to have the argument that your workforce is temporarily unable to gain access to a federal facility which has been closed through no fault of the company as a precautionary result of the virus, and that they perform the kind of work such as satellite maintenance or things that are otherwise important that cannot be performed outside of the home. That money will be paid to your company to be available for you and your employees to maintain a state of readiness. Keep in mind, though, that you have to be ready to explain to the contracting officer that you have a specialized degree of skill in delivery. So I don't think that if you run a janitorial service, and of course there are tremendous janitorial services, it's going to be harder for you to say that that is a certain specific kind of skill, because the CO is probably going to be able to find another janitor service, but they're not going to be able to necessarily get your people back to do the job that you're doing. So that's a huge provision and something that companies have got to be aware of right away. It's a really big deal.
And while you and I are sitting in here doing this Facebook Live event, the co-directors, Stephanie Wilson and Terry O'Connor of our government contracts practice here at Berenzweig Leonard, probably are glued to the phone talking to our government contracts clients about these very issues and walking them through them, sort of on the front lines.
Absolutely, absolutely. Todd, next question.
Okay, another follow-up from Chris. At the end of the 8-week period, will they be comparing the employee headcount to the payroll figures sent from the prior 12 months or from the headcount at the beginning of the 8 weeks in order to determine the forgiveness amount?
It's a good thing we had coffee this morning before we went on the air.
Yeah, exactly.
Good questions.
I mean, honestly, sadly, these are the questions that have popped into my head too. So, Chris, I don't want to say great minds think alike. I don't want to necessarily insult you in any way on this one. But it's a great question, because the form, the government is great with forms, and usually they're very good with explaining and sometimes over-explaining what needs to go into each box. In this particular case, there's not as much explanation. And so the form actually just says number of employees. I'll look at it right now. I've got the form right here.
Yep.
It says number of jobs. And so the question is, and Chris hit the nail on the head. Last year, you might have had, let's just say, 25 employees. This year, you might have 20 employees. And it could be for valid reasons. I mean, sometimes leaner is meaner sometimes. And so it could be for very valid reasons, and the company could be in a better position with 20 employees. The problem is, if you put the number down from last year, 25, you've now all of a sudden put yourself at a huge disadvantage, because if you have 25 but you really only have 20 on your workforce right now, at the end of that 8-week period, somehow you've got to bring 5 more on. I think the answer to that question, Chris, is put down the current number of employees, because what we're trying to do is preserve the status quo right now. We're trying to basically say who's on your payroll right now and who's on your payroll right now, and so that we want to make sure that the net is 0 when we look at that 8 weeks from now. The only reason why we're doing this historical 12-month look back is there's got to be some way to measure what constitutes payroll costs. So I think that's the answer to be determined, but I think that's an educated and frankly common sense approach that I personally would take.
Yeah, that sounds right. Todd, next question.
Okay, this comes from Barbara. What if I have multiple companies and all combined they have over 500 employees?
Want to take that one?
Yeah, we hit that earlier, the affiliation issue, and the affiliation issue means if you have common ownership. So if this was Barbara.
Yes.
Okay, so if Barbara is the owner of multiple companies, and somehow you could show that they are affiliated companies, she might have a commercial division, she might have a federal contracting division, but ultimately, and she might even use the same overhead, the same payroll processor for both companies. Those are called affiliation issues, and they have yet to be worked out. The SBA has noted that this is very much an issue, but I think we are a week or two away. As I read last night, we're about a week or two away of the regulations dealing with affiliation.
Declan, let me ask you an HR-related question before we go into a question from our next viewer. We are going through the rules and we're going through the steps, and this is crucial for survival. Certainly in the background, we have the human element. We have people who are continuing to work or who are trying to continue to work. They're at home, they're scared, they're worried, and they're still, many of them are still on payroll, but they're very concerned about where they're at. From an HR standpoint, if you're a small or mid-sized business and you have to roll out these huge changes, such as, for example, you have to contact people and tell them that they're being furloughed, that's a really big deal. What practical advice do you have for executives and HR professionals in terms of how to actually do this? Because this is really a very heart-wrenching and historic moment.
We've grappled with this. I've been on so many calls with companies and HR directors and other executives to say exactly how do we do this. And I said this last Friday. It is not in the nature of like companies like this that I've experienced. I know, there's an exception for most of these stories, but they are really, really grappling with like letting go of employees. I keep telling them that there's a system set up, the government's coming into play. Don't feel so bad about that. But you have to explain to them and help send them the link to unemployment. Tell them what unemployment currently is, so that there's not this mystery involved in all of it. The heart is in the right place for so many companies. They're like, I want to keep them on PTO. We talked about this last week. I want to keep them on. I was reading an article this morning before I came in, and Lady Gaga's father owns a restaurant, I guess, in Union Station, I think it is, or Penn Station.
Penn Station.
Yeah, Penn Station. Yeah. He set up, and I believe his heart was in the right place, he set up a GoFundMe page to try to help his employees. That all sounds great, but you know what? The government has set up a GoFundMe page.
Right.
It's called unemployment. It's called the
Right.
leave laws, and now it's called the Paycheck Protection Program. Take advantage of them. Look to the government as a partner for private business. And admittedly, it has not always been as easy to have that relationship. Right now, it seems to me that it very much is easy. When the government comes out with a form that they say under the Paperwork Reduction Act will only take you 8 minutes to prepare,
Do it.
that's pretty good.
Yeah, and I think that, Declan, you raise a critical point because communication is key right now. And by the way, a lot of us are working remote. Our law firm is 100% operational, although we have some people that are working remotely. Most are.
Yeah.
And we have our morning bridge call where everybody jumps in and participates, and we're fully coordinated. But communication is the key. Every executive that we work with is just really feeling heartbroken right now because they feel terrible that they have to furlough employees. And I think a point that you raised is something that I would just like to amplify. The purpose and the intention of Congress right now and of the president is that we use this as a temporary social safety net because we don't want businesses going out of business. American small business drives about 60% of the United States economy, and we all have to be here when we're on the other side of the wave. So that's what the intention is. I'm talking to CEOs that are saying, okay, I'm going to use some PTO, then I'm going to use some sick leave. You don't have to do that. There are ways to do this which are quick, that are efficient, that can help you preserve capital, and that's the way to go.
Yeah, for all the talk about, over the years, bailouts on Wall Street and bailouts to this big corporation.
This is not a bailout.
This is not what we're talking about here. We are finally talking about getting the hands into small businesses, 500 or less employees, and ultimately not to get that money into the businesses to go do something extravagant with it or whatever. In fact, putting strings attached on it to get it to the employees.
Right.
And so the government, I think, has it right here. I mean, on this particular policy, I think that they got it right, and companies need to really just take advantage of it.
These are not toxic mortgages. The government instructed us to stay home.
Yeah.
This is a dramatically different situation.
Yeah, they say that, just real quick, they say that the $349 billion, that's the cap, that's the end of it, it's first come, first serve. When it runs out, it runs out. I frankly hope that first off, I hope it runs out very quickly, because that means that businesses are
taking advantage of it.
They're taking advantage of it. They're learning about it,
Right.
and they're doing it. And I suspect, if it runs out a lot quicker, and potentially will, I hope there's a supplement to it.
Yeah,
and I
me
hope
too.
more businesses are able to do it. So.
Yep. Todd, next question.
Yeah, when we're getting a lot of great questions from a lot of different types of small businesses, which we all know is the engine that keeps America going here. And this particular
Totally.
question from Sherry, she owns a golf course and a restaurant. So they've had to lay off all of their
I'm
employees.
sorry, Todd, a golf course and a restaurant?
Yes.
Okay.
In Virginia, golf is an essential
Yes,
thing, so we're
and
good.
well, in Maryland, he shut them down, and it's affected. Governor Hogan shut down golf courses.
Come to Virginia and play golf.
So they have laid off all the employees, and over the next month or so, this is we're heading into the peak season of golf. We're kicking off the golf season, and they're going to have to spend a lot on the golf course just to take care of the maintenance of the course. So they are not receiving memberships or green fees, and they need the funds to pay for course maintenance. Do you think they could get a grant through the Economic Disaster Program?
So they probably have a couple of different options. I don't think they could do the PPP, the Paycheck Protection Program, because right now they wouldn't be able to certify that they have the requisite number of employees, because when it says number of number of jobs, it sounds like that's going to be a really paltry number.
They don't presently have active operations.
Yes.
Right. Well, right now they still have 3 salaried employees, and including the 2 owners that are still working during.
Yeah,
this.
that's just not going to get them enough capital in the
so?
door. For 3, that's just not going to get them enough.
Well, but remember, you have and this is again, the regs are hot off the presses.
Yes.
So we're kind of all figuring this out as a community in America.
And
but
we argue like a married couple all the time, so this
of
is
course.
perfect.
We argue more than I do with my wife. But be that as it may, Rachel, we don't argue. Just I know she's watching.
You just agree with her.
Well, yeah. Why not, and I'm just presenting this, why not try to have the argument that you've got a handful of people that are employed, you have other people that are on temporary furlough, you do a 12-month average monthly payroll look back, you calculate the number, you multiply it by 2.5. Why not just tee that up?
I think you could do that. I guess what I was worried
It's a risk,
about,
but it's still a possibility.
What I was more worried about is that's just not going to give them enough capital, because once you divide it by 12 and then multiply it by 2.5,
he has the unique problem about the capex to keep the greens going.
it's just not going to. Yeah. So,
Right.
so there are other loans. So there are other disaster relief loans under the SBA.
Right.
The thing that makes the Paycheck Protection Program so attractive to everybody, it's abbreviated, it's self-certifying, there is no collateral required,
No personal
and
guarantee.
there is no personal guarantees. As business
Nothing.
owners, Seth, we look at that and we say that's a good thing. You don't
We'll
want to be
take it.
personally on the hook.
Right.
Yeah, we'll take that. So I think that they may need to look to see. I think that's more of a capital issue. How much do you need, and where can you get it from? And you hope that they do. You hope that they're able to pull through. People are going to need some good rounds of golf after being cooped up all this time.
That's an essential service.
Yes.
Todd, next question.
Okay, this comes from Scott, and he wants to know if you have any guidance on whether guaranteed payments to a partner and a partnership based upon the effects in a law firm or accounting firm are included in payroll costs and for computing the forgiveness amount.
Well, I'll take a first stab at that. That's, again, great questions. Absolutely great questions today. If someone has a minimum monthly draw such that they run it, so let's say that you have paychecks and you're running your paychecks payroll every 2 weeks.
Yeah.
You may have a situation with your partners for your professional services firm, whether you're an architect or you're a lawyer or a doctor or what have you, where you have a certain guaranteed base plus profit sharing / whatever.
Yes.
If you run that through your paychecks payroll as part of the function of that, why not be able to include that within the $100,000 cap?
I
What do
think
you
that's
think?
right. In other words, they define it as compensation, and I think if it's a guaranteed sort of minimum monthly, and it's not kind of an eat what you kill type model, I think I would err on the side of including that. I just think
If it's run through payroll.
That's right. I think where you get into bigger issues is if it's more profits, profits participation type stuff. And keep in mind, it's up to $100,000. And so, you're probably, and again, I don't want to speculate, and I don't want to throw around big numbers as though they're the norm, but, you're going to be capped for every employee at $100,000. So you may not be getting much beyond any that guaranteed draw anyways to even get into the issue of profits distribution.
So a lot of it depends. If they're running through a standard payroll processing system as part of that compensation, you're going to have an easier time. If you have if your financial plumbing is that you have a different system in place, then the answer is it depends, and then we'd probably need a little bit more information but there's always a way to try to, to find a solution there.
Yeah.
Todd, next question.
Okay, this comes from David, and he says, if your company is wholly owned by a parent company but is under 500 employees and is not subsidized by the parent company, do they qualify for PPP?
Another great question.
So
So let's assume, for purposes of the question, that if the sub, which is a wholly owned sub, has less than 500 employees, I assume that the question is inferring that if you include the parent, that puts you over 500 employees. Where does that put you if you're the sub?
It gets back to the affiliation rules we talked about before, where they're coming out with these regulations. I would say the answer probably is how closely aligned, how closely affiliated they are. I honestly, at this stage, because you're applying right now and the regulations are not coming out, I think what I would do is I would apply under the EIN, under the employee identification number of the company that issues paychecks, and that's the one that you're going to be able to provide your backup payroll documentation for. Put that addendum A that says we're wholly owned by a parent company. If there's any kind of expansion that you can put in there that says, but we don't, just so it's not, because we have a lot of, we see a lot of companies where it's commingled.
Disclose but clarify.
Yeah.
Disclose but clarify.
Yeah, and give it a shot.
Give it a shot. And the more that you have that, what we lawyers like to call the corporate veil between them, the more that you're able to distinguish, the more that you're able to say that you have separate business operations, the more that you're able to say that you run separate payroll. I think that you're going to have a good shot at being able to do that. I think that's one of those where it would be great to have a little bit of further questions and follow-up.
Yeah.
But I think that there's definitely could be an architecture for a legitimate argument.
And can I just add, so if you're questioned later on some of these nuances and technicalities, if the goal here by the federal government is to keep companies afloat, if the goal is to keep companies afloat and to keep people on the payroll, I don't think the government right now. So if we told that person, you're out of luck because affiliation rules means you're not going to be able to keep those under 500 employees employed, I think the government would actually be mad at that because the goal is to keep as many people on the payroll rolls as we speak, right now. So I think that company, by doing what we just suggested, is absolutely operating within the spirit and the goals of this program.
Apply the rules in the way in which they're intended. And I'll give you another example. People within the company, both principals and any other employees that have a retirement plan, the old rules were that you could, under certain circumstances, borrow up to $50,000 and 50% of the balance of the account under a 5-year payback. The rules have just been expanded, and your retirement plan administrators are now going through the amendment process to comply with Congress, where that's been increased to up to $100,000.
Oh, yes.
And 100% of the retirement account.
Yeah.
If you take a look at the language with regard to how to, and that's a really big deal too, because you control that and you pay back yourself.
Yeah.
So you're just borrowing from yourself at a low rate of interest. The rules are not well written on that, but during our conference call last night with the CEOs, the universal conclusion was that if you can certify that your company has been adversely impacted as a direct result of the coronavirus, that you qualify for those funds. And again, it's under the intention that Congress wants us to do what we can to try to get as much relief as possible during this national emergency.
Yes. Yep.
So, Todd, I think that we're down to just about our last question.
Yeah, we got a couple of questions left here, and this one comes from...
we can run 1 or 2 minutes over, Bob.
Sure. Okay. We want to answer everybody's questions.
Sure.
This comes from Ivan, and his question is, if you are a government contractor that is due to be reimbursed by your customer for the hours you are not able to bill, are you able to apply for PPP in advance of the reimbursement? If so, will it be forgiven or turned into a loan?
So the contractor has done the work. They have not yet turned the invoice around to the customer to be able to be paid for it. But then the question is, can you still recognize that work for purposes of the PPP?
Or was Ivan talking about going under that program you talked about earlier where you don't have the work to do? I'm sorry, I don't mean to confuse things, but it sounded like maybe they're not.
You are due to be reimbursed by your customer for hours you are not able to bill.
Not able to bill. It's that program we talked about before.
I would look at section, it's either 1036 or 3610.
Yes.
Which is the provision where you've done the work or you're in a position to do the work, but you haven't been able to Frankly, I think that the most careful answer is to say that, frankly, I think we need more information. And please feel free to contact us afterward. But it sounds to me like there's one of two potential scenarios. Either you've got people ready and they're doing work related to a federal facility, but they can't submit or bill for the work. I think that would be protected under the new provision with the discretion for liberal mods by the CO. Or if you've done the work, but you haven't been able to bill for it yet, and if you want to include that in your regular PPP average payroll calculation, then you can include that. But I think that we would like to have a little bit more information, and we promise that if anybody has a follow-up question, we promise you that we'll get back to you with follow-up.
And I would just add that if they're getting this money under this program, this government contracting program, that they are then using to pay the employees, there could be an issue of double dipping because, remember, the Paycheck Protection Act is supposed to put money in companies' hands to pay employees, whether they're working or not, frankly.
Right.
And if this unique government program that we keep talking about that is so potent for government contractors does a lot of the same thing, which is allows the government contractor to bill for work that was not performed in order to pay these employees, there may be some sort of a double dipping or exclusionary thing that they may want to think about. But I agree with you.
Yeah.
That's something we probably need to look at a little bit deeper before we go down that road.
So we're coming up to the end of our hour today, and I'd like to thank everybody for joining us. We are aiming to have a program every Friday morning so that people can tune in. We undoubtedly are going to continue to have further developments as it relates to the rules, the regs, the clarifications, and as we all know that we're in a unique moment of history. But what we want to do as a result of this broadcast is to try to lower the temperature down for your anxiety and your pressure as it relates to the business side. We're all going to be fighting through the medical aspect of this, and everybody stay safe. We're safe here in our studio here. We have social distancing, and everybody here is healthy and fine. But we want to help you lean forward through this crisis from a business standpoint and to help you get these rules teed up. The more that you unlock and the more that you understand, then the more power that you have to be able to press through this crisis. So we'll see you next week. Thanks so much for joining us. We'll see you soon.
Thanks a lot.